السلام عليكم ورحمة الله تعالى وبركاته. بسم الله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Chawi. Today is Sunday, 4th of August 2024, and I'll be doing the weekly market review. Starting with DXY, here we're viewing the weekly time frame chart. As you can see, now we're seeing some movement to the downside here on DXY. Last week we retraced towards that favor gap, the SIBI, the sell side imbalance, buy side inefficiency. So it's inefficient with the buy side delivery. So between this candle's low and this candle's high here, we've seen price retrace, make some of the area efficient. There was a close area here, small area that wasn't efficient. So we didn't completely close it out. And then we pretty much tanked sharply down lower towards that sell side liquidity, as I've mentioned last week. And so now looking forward going into the next week or the next month going for August, I'm looking at this level here from this rejection block here towards that sell side liquidity, this area that I'm looking at as a means of withdrawing liquidity. So I'm trying to look for sells, I'm trying to look for shorts when price is gravitating towards that sell side liquidity or that drawn liquidity area. It's not an area, it's not a zone. It's pretty much a very specific levels here. We have the rejection block, we have the consequent attachment of this discount wick here, and we have the low. So these are very specific levels that are pretty much clear on the charts, and on any charts, two persons or two people cannot argue on what is the consequent attachment of this discount wick or what's the low of this weekly candle, because it's a universal thing on every other chart in the world. So whether you're in India, whether you're in the Middle East or in the US, this low is the same low for every other trader. I'm not drawing animal patterns here. I'm not drawing some Elliott wave, Fibonacci from this low or from this high. No. It's a very specific levels that are pretty much obvious in the charts. I'm not picking random levels in the chart based on some animal patterns or retail concepts or Elliott waves or whatever you want to call it. These are very specific levels that are in the chart, and that I'm looking at them as a means of draw liquidity of price gravitating towards them and through them. I'm not looking for price to treat these as supports, as means of support that I can be going long at. I'm looking at these levels as means of going short to them and through them. So I'm looking for shorts to cannibalize these levels here. I'm not looking for longs once we trade here. No, that's not how I trade. I trade pretty much the opposite of how, and I'm not trying to pretty much seem pride or something. No, that's actually what I'm doing here. I'm trading against what the retail are trading. So if retail are looking to go long here, I'm looking to go short, going to that shorting. So it's like the paradigm shift going against what the retail are trying to do and pretty much cannibalizing them through psychology, because the markets are the mirror of psychology of other retail traders or pretty much of every trader. But if you go in with the wrong mindset, you'll always see the retail concepts and you'll always be cannibalized, you'll always be destroyed with the big fish, with the big whales that are the markets, the market makers, the pretty much the people who are dealing in the markets, the people who are printing those candlesticks, the people who are manipulating the markets. So it's up to you how you change your perspective about the markets and how you can pretty much extract some insights and information, knowledge that can be useful to you. If you don't look at the markets this way, you'll be always the victim. And it's like two choices. You either be the victim or the one who you think the victim is. So if I'm a retail trader and I think I'm a victim and someone is pretty much destroying me, you either be that guy or the victim. And I'm not going to be choosing the victim with all due respect. So price, as you can see, took out the buy side liquidity here and sharp down close candle towards the downside here, taking out this low. So now I don't want to see price trading above this high, preferably. It can retrace towards the consequence of this premium wick, which is this level over here. But anything above that, I don't want to see it on. I don't want to see price close on a daily basis above the consequence of this premium wick. Otherwise, it would be just it would be viewed by me as a means of manipulation if we trade just to the constant, but we never closed above it. It would be, to me, it would be means of manipulation in the markets. And I don't really think price will be gravitating all the way back up here towards the constant of that premium wick. That's what I think. Now we'll just be pushing, tanking now lower towards the sell liquidity over here. Going to the daily time frame chart, as you can see here on the daily time frame chart, we have formed buy side liquidity here, and we take it here on Monday, Tuesday forming the high of the week, and touching the bearish order block here. These two consecutive up close candles are the bearish order block. You can go to your charts and you can draw the line. It's pretty much on the tick, and it started trading down lower here. Bearish breaker, retracement, accumulating some orders at the bearish breaker, and on Friday we pretty much jammed down lower through the sell side liquidity. So going to the next week, we have this bearish order block. Price might retrace to that bearish order block, as I've mentioned. We might see some manipulation to the constant of that premium wick, which is roughly the rejection block here on the daily time frame chart, and then we'll be pretty much jamming down lower towards the sell side liquidity that I've mentioned earlier on. So that is going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, ES is starting to drop down lower, and it's not leaving any imbalances, not leaving any inefficiencies, any SIBIs in this case scenario. In a sell program, you're likely to see SIBIs, sell side imbalance, buy side inefficiency. So in sell program, we are pretty much short in the buy side delivery. We're inefficient with the buy side delivery because the market is spooling to the downside. We're pretty much in a sell program. In a sell program, price is pretty much just spooling the market's pulling the prices down lower. So we're pretty much inefficient. We're pretty much short on buy side delivery. So in this case, price is not leaving any SIBIs or not leaving any favor gaps or imbalances to work with. So it retraces all the way up here towards that inversion favor gap. This candle is high and this candle is low. This forms the inversion favor gap after we closed below it here. So we're pretty much treating it as resistance here. As you can see, the concentration of that area, of that inversion favor gap, is pretty much being respected and pretty much pushed down lower to the downside. We have this bullish order block that is not actually being respected, in my opinion, because it's very small bodies, and we have a lot of wicks, by the way. So I don't think price will ever respect this and will just be pushing down lower towards that sell liquidity. Anything below that, we have this favor gap that price might fill it up, because it's when it retraced down lower here, it retraced to that favor gap, but it didn't completely fill it. There is a small gap which is here. Price might trade down lower. If it trades below this low, we have this area to work with. If it trades below this favor gap, we have the consequence of this discount wick right there. So this is how I'm looking in the market. We're still looking for lower prices here. And also, by the way, we have closed below this inversion favor gap here. So I'm expecting the bullish order block high here to be treated as resistance. It might overshoot towards that inversion favor gap. This is how I use BD arrays. I use BD arrays that were pretty much authored by my mentor, Michael G. Harrelson, or also known as the Inner Circle Trader. I use them as an inversion BD arrays. So I pretty much use BD arrays as my mentor has taught me in both ways. Whether we're going long, I'll be using them to go long. But when I sense the switch in the program, when we're going from buy program to sell program, when we switch to sell program, I'm going to be using the same BD arrays to go long, to support shorting ideas, to treat them as means of resistance when we're trying to go short. So here I'm expecting the inversion favor gap here. This candle is high, this candle is low, to be treated as resistance. Price might overshoot to the high, but I'm expecting it to just pretty much stop at the concentration of that inversion favor gap. Going to the daily time frame chart, as you can see here, price Monday, Tuesday, Wednesday, right up here. This daily favor gap, we pretty much closed it over here. Thursday, we traded above that high, we overshot. But where did we overshoot towards? We have this volume imbalance right there. And we have a liquidity void here between this candle's low and this opening of this candle that I've already explained last week, that we might see an overshoot towards that area because it's inefficient. There was absolutely no trading in that area. So we were likely to gravitate back towards that area to pretty much make some history, make some transactions at that level before pushing down lower to the downside. So volume imbalance, as you can see right there, pretty much traded to it here. Bearish order block right there, pretty much also traded to it, and we start pushing down lower. Now we have this bearish proposal block that price might retrace, and we have this volume imbalance here. Price might, as means of a manipulation, it might manipulate towards these BDR rays before pushing down lower towards this side liquidity. Now we have, there's two scenarios. It either can push down lower directly on Monday or Tuesday, just pushing down lower towards that side liquidity, or if it wants to build more liquidity, if it wants to engineer more liquidity into the marketplace, it can pretty much manipulate towards this area that I've mentioned, the bearish propulsion block and the volume balance here. And then from that area, after we've manipulated and we created the SMT as a confirmation, as means of confirmation between the closely and inversely correlated market classes regarding this asset class or ES, will be trading down lower towards the sell side liquidity. So this is how I'm looking at it right now, and this is going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see here, it's also an NQ, but on NQ you can see that we still have a fair value gap here that I think is going to be treated as a breakaway gap. But as you can see, it's this candle is low, and this with what we formed last week is pretty much an immediate rebalance. It's also shown on ES, but I didn't drew the line here for ES. But regarding NQ, you can see the immediate rebalance here. We also have, it has a trace towards the inversion fair value gap here. It treated it as resistance and pushed down lower towards the sell side liquidity. From here, I'm expecting a continuation here. We have a fair value gap here. I'm looking for price to push down lower towards that fair value gap, and we have the sell side liquidity over here. So going to the daily time frame chart, as you can see, formed by side liquidity, accumulation, manipulation to the BD arrays. I've mentioned the inversion fair value gap here. The inversion fair value gap on the daily time frame chart, this candle is high and this candle is low. So price has, after it closed below it, it treated it as resistance and started trading down lower. We traded to the bearish order block, as I mentioned here. You can see traded to the bearish order block, traded to daily fair value gap here, as you can see, and we push down lower. Now we have bearish propulsion block, and we have the volume imbalance here. Price might manipulate towards these levels after we've taken out the sell side liquidity. So it's always wise to not trade after we have reached to some means of withdrawal liquidity. Now this will be considered a means of withdrawal liquidity because it's a level that we are expecting for price to move towards. It's not a partial because we're on the daily time frame chart. We're looking for levels as means of withdrawal liquidity, because from this level to this level, it's pretty much hundreds of ticks. It's not like hundreds of handles. It's not a scalp move. It's not a Mickey Mouse move. No, it's actually hundreds, more than 1,500 or 2,000 handles. So once price reaches to a good drawn liquidity area, you would want to take some profits and pretty much chill until price give you more intel. You would want to demand more intel from market before going in one more time and trying to trade, because at this point we've already distributed our orders, pretty much distributed, and we've taken our profits. From here we want to see price pretty much farming and engineering pretty much um, in a way or shape or form, uh, a way like it will be engineering a trap for retail to be pretty much engineering their liquidity in order for us to use it, in order for us to pretty much benefit from it. So in this case, the trap that was recently formed here was this consolidation. Pretty much every trader was out of business here in this consolidation. Price broke down lower first. We pretty much tricked every other retail trader that we were breaking down lower. We're done. We're breaking down lower, which is right in a macro view that we're looking for low prices. We're in a sell program, but the timing was wrong. We pushed down lower here just to trick retail that with the breakout artist to go short below this low, and then we pushed up higher. Most of the traders that are breaking down lower below this short below this low going short as a breakout short, you mean, they'll be placing their stop loss or buy stop above this buy side liquidity, thinking that this is a resistance because price has retraced towards it here, as you can see, and it failed to go above it. They'll be thinking that this is a resistance. They will be trusting it as resistance, and they'll be going short. Price will be retracing here, pushing above these highs, and many traders will be thinking that this is a bullish breaker now because we have formed a high, low, higher high. So now it would be normal to expect this pattern to work because the trading patterns without thinking about the pretty much the macro view or the macro context about the markets and how the market are moving, and they're not pretty much doing the intermarket analysis between other markets and pretty much what is happening around the world in in, in the means of geopolitical events that are taking place around the world. So they will be just trading patterns, and whoever is trading patterns, they will fail miserably because in this business, in this industry, in this financial vehicle, it's not about trading patterns. Actually, in a matter of fact, it's just trading context, trading psychology, going to the markets and pretty much reading the markets as a mirror of psychology, expecting as it will be showing you the psychology of retail traders and how they're thinking. Their thoughts is visible in these candlesticks, as if I can see it as in the Matrix, how Neo started seeing the binary code after before it was a binary code, but later on, once he understood the language, once he understood everything around the Matrix, he understood the binary code, and now everything made sense. And the same thing here. So you have to change your perspective about the markets. You cannot be going to the markets and thinking that, oh, I'm just gonna be trading the unicorn pattern, which is ICT's favorite. He just keeps adjusting it as it's the most strongest pattern, which is wrong. You cannot be trading patterns for patterns' sake. You gotta be trading the markets. You gotta be looking and pretty much studying the markets. And if you cannot do that, this business is not for you. It's not meant for you. So you're better off just saving yourself a lot of trouble and a lot of time, a lot of money, and just go do something else that you enjoy. If you cannot enjoy studying price action, if you cannot enjoy studying the markets as a whole, you're pretty much wasting your time. So you're better off doing something else than trading because this is not a get quick, get rich quick scheme. It's not something to, to pretty much learn it in a few months to get rich quick. It's not about that. We're here students. I'm a long life student of the markets. That's who I am. So back to the markets and enough of the rants here. Pretty much price traded up higher, bearish order block, push down lower. I'm expecting price here to trace towards the volume balance, bearish propulsion block here, and pretty much then later on, if it wants to manipulate here towards this area that I've mentioned, I'm looking for this area next to be hit. So this is going to be pretty much it for NQ. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. As you can see, for fiber, price has retraced all the way down lower towards this deeper favor gap between this or this high to this low. We have one up close candle between these levels, which has a gap, a buy side imbalance, sell side inefficiency. So it's inefficient with sell side delivery. Why? Because we're in a buy program. When we are in a buy program and the market is pulling to the upside, will be inefficient with the buy side delivery. So price retraced all the way down lower towards this favor gap, made some of it efficient here, as you can see. Pretty much traded close to the encroachment here, traded to the encroachment of this favorite gap, and retraced all the way, and pretty much you can see closed over here. So the bodies are respecting the upper favorite gap, but it wicked and pretty much mohawked towards the deeper favorite gap to pretty much collect and engineer more orders, more liquidity into the marketplace that will permit price to pretty much push up higher towards the buy side liquidity right there. So going to next week, we have the consequence of this discount week that I pretty much I don't really want to see price close on a daily basis below this level here. I want to see it pretty much being respected as means of a resist as means of support, sorry, and pretty much push up higher towards the buy side liquidity. Going to the daily time frame chart, you can see we're pretty much pushing up, pushing down lower here towards that favorite gap, the weekly favorite gap, and we pushed up higher here on Friday. The consequence of this discount week from the weekly time frame chart is pretty much this bullish order block. So I don't want to see price trade below this level on a daily basis. I want to see it close on a daily basis below this level, and then we will pretty much push up higher towards the buy side liquidity over here, right there. So that's how I'm looking at it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, cable has also retraced because it's also closely correlated market with Euro USD, or also known as the fiber. So it has retraced to the deeper favorite gap right there, but we didn't see the reaction on Euro USD. We've closed here right there, but your Pound USD is pretty much slower with the reaction, slower with how it moved. Going to the daily time frame chart, you can see how pretty much traded down lower, but on Friday we didn't see that move that pushed up higher, right? Like USD, EU, or fiber did. So I'm still expecting a run up higher here on Pound USD towards as a first means of drawn liquidity, which is this favorite gap. I'm looking at this as means of drawn liquidity, my first target, and then we have this buy side liquidity. On the weekly time frame chart, you can see that we have also this buy side liquidity. But on the daily time frame chart, which is my main interest in, I'm looking for this favorite gap here. I don't demand price reaching towards this buy side liquidity. I'm pretty much satisfied with it reaching or trading towards that favorite gap, and I'll be taking the majority of my position off. I'll just be leaving a runner towards this buy side liquidity, the daily time frame chart, and the weekly time frame chart, buy side liquidity here. But my main target, my main objective here is this favorite gap. Anything later on, I don't care. It might from here, it might just it might trade towards that favorite gap, and then just shit to bed and trade all the way down lower. You cannot be getting 100% accuracy in these markets, and no one can pretty much claim that. Anyone can be wrong, and everyone is wrong. Sometimes the best traders can get it wrong. So to protect us as a traders, because I'm not in this business just to call out levels. I'm in this business to actually trade and make money. So to protect us as traders from doing some reckless things in the markets, trying to pretty much demand a specific level in the market, we set ourselves pretty much a level that has a higher probability of reaching over a huge historical statistics studies, price reaching to our first partial of the first, you can name it partial of the position, is better than holding the position all the way towards the buy side liquidity. I hope it made sense. And now, if there's any questions, please let me know. I'll be explaining more about this topic specifically. Pretty much a video by itself. I can be explaining anything that you're interested in. So whatever topic that you want to pretty much learn about, just please let me know in the comments section below, and I'll be more than happy to pretty much produce a teaching or anything that will help you to understand anything about the markets. It could be from trading toward psychology, anything else. And if you don't want to comment, you can join our Discord server. It's in the description also below. You can join our Discord server and you can ask any questions there, and I'll be more than happy to help you there. We pretty much from now on then we pretty much host reading sessions, backtesting sessions. We offer some values there, so I'll be more than happy, and you're more than welcome to join our Discord server. So I believe this is gonna be pretty much it for this week review. If you have any questions or if you want to go over any information about trading or the markets or anything in general, please don't hesitate to message me on Twitter or to join the Discord server. That's link is in the description below to ask anything you want to ask. I hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.